Financial expert Peter Schiff is warning that the U.S. economy is heading for a downturn worse than the Great Depression. And if he's right, home values will not be immune. Stay with me because what I'm about to share could be the difference between protecting your wealth or watching it potentially disappear. Let's talk about it. So I do want to preface by saying that these experts have been calling for market crashes for years now, and I believe it's my job to help distill the information because I saw this interview with Peter Schiff and he was saying all these crazy things, and it's like, okay, they've been saying this for years. Is it actually going to come true? What is really going to happen in the real estate market? Because I'm taking everything that he said and distilling it down to the real estate market specifically. The first point that he talked about, it was pretty interesting. It was the illusion of a strong housing market. He was saying something along the lines of, if you only look at home prices, it seems like the market's doing fine, right? Prices are still really high, multiple offers are happening in some places, and inventory is still low. But that's only half of the story. I've had conversations, I've heard people talking about how they have been saving for years to buy homes, right? And they have been so excited to do so, only for them to have not pulled the trigger 2 or 3 or 4 years ago, and now they are completely priced out of the market. And I'm telling you, I'm seeing that a lot. I'm seeing so many people who wanted to buy homes years ago and they didn't go forward with it because of one reason or another, and now they're in a position where they're completely priced out of the market. I actually had a personal experience with this. Friends that I helped buy a home a little bit over a year ago, and we were showing them homes like 5 years ago, or 5 years prior to that, so 6 years ago at this point. So they literally could have bought a house for $200,000 less than what they ended up paying because they bought it a little bit over a year ago. And this is happening all the time. And look, my channel is all about homeowners, home sellers, people that are interested in investing in real estate. But this is the reality. I'm trying to give you valuable information about the housing market. And this is really important for sellers. Mortgage rates have doubled in the last 2 years. So a home that was like around $2,000 a month just a couple years ago, now it's like $3,500, $3,800, depending on taxes and insurance. And that's why so many buyers are stuck on the sidelines. And if buyers can't afford homes, how can these prices still stay high? And this is what Peter Schiff is talking about when he says that the housing market is not as strong as it looks. And I definitely believe that there is a lot of truth to that because we see and we hear one thing, and that's what we latch on to. And a lot of people are saying the market's gonna crash, the market's gonna crash. There have been thousands and tens of thousands of people who have been saying that for years, but there's so much more to the story. And with prices especially, and that's the next point. A lot of people assume that if demand drops, prices will crash like they did in 2008, right? But this time, this situation is way different. Homeowners who locked in the mortgage rates do not want to sell, and that's keeping inventory low. I have heard this said, and I really like it, that it's the golden handcuffs. People like myself who bought in 2018, and then I was able to refinance in 2021. So I forget exactly what the rate was when I bought in 2018, but I was able to refinance to 2.625%. Now, it would be crazy for me to sell the property that I'm in and buy another property at 7% in the hopes that, yes, I know I will be able to refinance at some point, but how low? Will I ever get to 2.625% again? I absolutely do not believe that is the case. Homeowners who locked into low mortgage rates, they don't want to sell. And again, that is what's keeping the inventory very low. But at the same time, we're starting to see cracks. We are starting to see mortgage delinquencies and they're creeping up. And we are starting to see layoffs that are rising. You know, I've read a comment recently from someone who said they were saving up for a home, but their rent increased significantly and now they have nothing. And this is the real problem. People who are trying to buy are now struggling just to keep up with their bills. And the truth of this is that inflation has made everything so much more expensive, but wages have not caught up. And Peter Schiff did warn about this, that if interest rates go even higher, housing affordability will get even worse. So no, prices are not going to crash overnight, and stop believing that. But real estate values could drop in real terms. Meaning if your home price stays the same, but everything else gets more expensive, you're actually losing money. And this is such a weird concept to think about. But look, here's the idea around this is that everything is so much more expensive. And how long will it actually take for the prices of goods to come down, of utilities to come down, of buying anything to come down? It could take years from now. We don't actually know. Here's the deal. There are always going to be people that need to sell their home. So if you are looking to sell your home and you want me to help you, if you're in the Philly area, all you gotta do is click that link below and schedule an appointment with me. If you need an agent referral anywhere in the US or Canada, I have connections to over 25,000 agents now. So just click that link below and schedule an appointment with me. And this is going to lead perfectly into the next point that I want to talk about, which is your home equity and the fact that it could potentially be at risk, but is it really? Let's talk about it a little more. I need you to picture this right now. If you bought in the last 3 years, you might be sitting on a little bit of equity from what you purchased. But what happens if that market shifts? A lot of people took out home equity loans thinking values were going to keep rising. And here's the deal. If your home is in places like Florida or Texas, where the market, where a lot of people are now underwater because they purchased a property and it's not worth what they paid for it. And I know as a personal experience, a friend in the Texas area who purchased a property, and he was telling me that his neighbor purchased around the same time and they are selling it for less than what they bought it for. So yes, that is actually happening right now. People are underwater because certain markets have essentially crashed, right? The prices have gone down from what people were paying for them just a year ago. So here you have people that are taking out home equity loans, home equity lines of credit, right? And they were hoping that the value is going to keep going up, but they have not. And now they're in a position where they can't even really use that money and they have to keep it where it is. And this is something that Peter Schiff was warning about, is that if inflation keeps eating away at people's paychecks, foreclosures will rise. And that could drag home values down. If you're a homeowner right now, you need to be thinking about how you can protect your equity. So don't overextend yourself. Don't assume home values will always go up. And if you're planning to sell, don't wait until the market turns against you. And this goes against a big point that I talk about all the time, which is how can you truly time the market? It's very, very, very difficult to time the market. But what's extremely important is you don't overextend yourself right now, betting that home values, especially your home value, is going to continue to go up. You have to make smart decisions. You have to be smart about what you do, and you have to be very strategic about what you do. Don't overextend yourself. Don't do things that are going to negatively affect you in a year or 2 years if values don't go up. Something else Peter was talking about is the investor world and why investors are getting really hit hard, because for years real estate investing seemed like such a sure thing. Rents kept rising, home values kept climbing, and short-term rentals were booming. But now landlords are starting to feel the pressure, like myself. I think about the properties that we purchased over the past few years and the fact that the cash flow was great, and I got stuck in a position where I actually had to refi one of my properties to take cash out. You know, a lot of different reasons. I don't really want to get into it, but then I actually had to increase my mortgage rate. And now we're at a point where that property was such a cash flow king for us, and it is not anymore. And I know that there are so many people who are in very, very similar positions where they had to do things, they had to refi, they had to take money out of a property. I'm specifically talking about investors to fund different areas of their lives. And this is happening all over the place and all the time. And that's why investors are getting hit really hard. The interesting thing about all this is that rents are at record highs, but people can only afford so much. And with higher mortgage rates, investors who bought in the last couple of years are struggling to make the numbers work right now. So if you are an investor, this is the time to really get smart. don't assume rent will always go up. And if you're holding on to a property that's barely breaking even, you need a new strategy before the market shifts. There are a significant amount of investors, especially short-term rental owners like myself, who are trying to sell their property now. Because in a lot of these markets, the top has already happened and it's starting to come down. In the Poconos, where I own my short-term rental, I believe that we hit the top and we are now going down. It is a pretty decent buyer's market in the Poconos right now, which sounds crazy because it's like the vast majority of the US is a seller's market. But not in the Poconos. It's vastly different there because it is a vacation destination. So there still are pockets throughout the US that are buyers markets, and you need a different strategy before the market shifts. And maybe that means taking the equity that you have, selling it, and then reinvesting that somewhere else. And I myself am very passionate about helping people, including myself, protect home value, and that's the next point that I want to touch on. And it's really, what can you do if you own a home currently? If you're thinking about buying, should you wait? Should you rent that property? Here's what I would do. If you own a home, lock in a fixed rate mortgage if you haven't already. Adjustable rate loans, they're good, but they can be painful if they adjust too high in the future. And if you're thinking about selling, pricing competitively now. Don't wait until the market turns. Be cautious about pulling equity out of your home, and what seems like extra cash today could turn into debt that you regret in the future. And if you are looking to buy, you just have to be patient. Prices may come down, they may not. And interest rates, they may come down, they may not. Look for motivated sellers. Some markets are already seeing price cuts like I've already mentioned. And make sure your mortgage payment is something that you can truly afford even if rates go up. And I don't care if you own or you rent. This is really important. Make sure that you get your finances in order now. You can't rely just on home appreciation to build wealth. Make sure that you have a solid financial plan outside of real estate. And I know that's weird for me to say because I've been the real estate guy for years now and only real estate, but you have to pay attention to what's happening and you have to diversify. This next point was very interesting, and this is what Peter was saying, is that what if banks collapse? We've already seen multiple bank failures over the past few years, and if the banking system weakens even further, that could hit real estate hard. Think about it. If banks are tight in lending, it's going to be harder for people to get mortgages. Less demand means lower home values, and if inflation keeps rising, which it potentially could, even homeowners who bought at a good time could see their wealth eroded. But you know what the key takeaway is here? Don't assume that the housing market is invincible. Be proactive about protecting your assets before things get worse. And I'm going to keep repeating that until you really get it. And now it's the big question, which is, are we seeing 2008 all over again? A lot of people are comparing this to the last housing crash in 2008. But here is the big difference. In 2008, people were over leveraged. They had bad loans, no equity, and when the market turned, they had no way out. Today, most homeowners have fixed rate mortgages and equity in their homes. That's an enormous advantage, but that doesn't mean that we're in the clear. If rates hit double digits, which I don't know, it could potentially happen. I'm never going to say it could never happen. Then there's going to be a huge housing freeze. If inflation keeps rising, people won't be able to afford their homes, even if they want to stay put. Now, this is not going to be a repeat of 2008, but that doesn't mean that we're safe. And you have to protect yourself moving forward. The housing market is always changing. If you're a homeowner, you need to know what to do to protect your equity. If you're a homeowner that's thinking about buying, you need to be smart about your next move. Drop a comment below and let me know what's happening in your local market. I would love to chat with you and see if I can help you in any way possible. And again, if you are looking to sell, just click that link below and let me help you.